Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, September 10, 2009. We start today's broadcast with the Bank of England, which decided on interest rates, keeping its benchmark rate at 0.5% as was widely expected. The bank also made no change to its current level of asset purchases. Investors have been concerned that with the economy still showing uneven growth and a prospect for weak third quarter growth, that the Bank of England would have expanded its asset purchase plan. With no change from the Bank of England, the pound-dollar pair broke through its recent resistance near 1.6580, rallying around 200 pips from its intraday low to set a new high of 1.6685. The pair has so far conformed to an upward channel that started at the beginning of the month, which has seen the pair rally around 550 pips since its low near 1.6115. The euro-pound saw a steep fall following the Bank of England release, and the pair tested resistance at 0.8825. The fall paired the euro's recent gains in this pair as the pound was pressured heading into its central bank decision. The decline today was a 76.4% retracement of the recent four-session rally. The euro-dollar pair fell overnight as stocks in Europe wobbled, but the euro managed to hold on to its gains this week, and in late New York trading breached yesterday's high. U.S. stocks were strong today for a third straight session, with the main indexes closing at the highest levels this year. Data from the U.S. was mixed. Weekly jobless claims fell by 26,000 to 550,000 for the week ended September 5th, which was the lowest level since July, a beneficial sign for the labor market. The number of people continuing to receive benefits fell by 159,000 to 6.08 million, the lowest level since April. However, on a down note, the U.S. trade balance widened in July, disappointing forecasts that had called for the trade deficit to shrink. A surge of imports was the reason, as the 4.7% increase in imports outpaced the 2.2% gain in exports. Despite the gains in U.S. stocks, the greenback headed lower against the yen, which has been the theme all week. That implies that the greenback is now the favored funding currency for carry trade. The pair is in a downward channel pattern, but today's low did not reach the support line. The yen was also higher against the Aussie today, first in Asian trading, as Australian employment figures were weaker than expected, and European stocks fell during the European session. The rally in U.S. stocks stalled the pair's decline at about 100 pips from high to low, and the Aussie paired about 50% of today's losses by the end of the global session. The Australian economy shed 27.1 thousand jobs in August, a figure that was about double the decline expected. The unemployment rate did remain at 5.8%. The data adds another piece of evidence that the Australian economy may slow as stimulus measures wane. Reports yesterday showed retail sales unexpectedly falling in July and new home loan approvals declining for the first time in 9 months. In Canada, the Bank of Canada also concluded its interest rate meeting today, with the bank holding rates at 0.25%. The bank said that the target rate can be expected to remain at its current level until the end of the second quarter of 2010. That statement, however, is conditional on how inflation fares. The US dollar-Canadian dollar pair increased overnight, but gave up those gains following the Bank of England decision and as US stocks rallied, which boosted risk appetite, which tends to favor the loonie. By the end of today's session, the pair had moved below a newly formed upward sloping line of support. Looking at the releases coming up to end the week, we will have Japan posting its revised growth figures for the second quarter and its consumer confidence, while overnight the UK will release producer prices and Germany will unveil its wholesale price index. Tomorrow, the US will release its preliminary version of September's UMich Consumer Sentiment Survey, its import prices, and wholesale inventories. Canada, meanwhile, posts its new housing price index. And that concludes today's broadcast. Thank you for watching us here at cmsfx.com, and happy trading.